All right. So, following the example I gave on the board in the last session, is this particular presentation. So, this is volatility 100 index. I want us to look at this at the structure here and see how the structure play out, just like I tried to exemplify, in that in the previous presentation. So let's look at the market structure. This is daily. You can look at the chart. If you look at my chart, you can see that my chart volatility 100 index is on daily. This is 4 hours. You see, if we're looking at 4 hours like this, for example, let me slam my phone. If you're looking at 4 hours, you will not really be able to see, what is the true direction and structure of this market. So let me go to like daily. If I go to daily, now look at daily. So from daily, you can see clearly that this market is trending on buy, right? Look at it. If I come down here, it started here, it went up and came down. So higher high, higher low. Then it came up here, breaking the structure here. The higher high, it went up to create a new one, and it traded down. Then it went up higher above this to create a new higher high. Then it came down. It went up higher above this to create a new high. Then it came down. Then it went up again. Then it came down and broke this. It broke this. It came down. So when market comes down like this, you will quickly believe, okay, this is a change of character. But the market went on to go ahead, to create a new higher high, breaking the last higher high. Then it came down and went up and retest. Okay, retest on it. So it didn't go above this, and now it's coming down. It pulled back here, and then it's here. But the way it is now, we can assume, though we might not trade it, but we are assuming that okay, this trend line that we have drawn, the first trend line and the last trend line, we have drawn it based on the behavior of the market over time. So we are looking at this market to break this line down here. By the time you break this down and maybe finally it cross below this down, then we can begin to say, okay, let's short the market. That's let's sell the market. But right now we can see that it can hold here. All right, so what we can just do for now is to continue to watch and see what happens in the market. And also I was talking about some zones. I remember I mentioned some zones in the market. So let's look at this market and identify the zones. Okay, so if you look at this one, when this market went up here, it came down, all right, to shoot up here. So why did this market shoot up from here? Okay, let me try and put something out. Right, so yeah, let's look at this here. Let's look at this. So this is daily. Let me go to 4 hours. Maybe we can see it better. 4 hours. Okay, this is 4 hours now. Yeah, this is 4 hours. So in 4 hours you can see that. Okay, let me see how I can reduce this. If I can be able to reduce it, fine. All right, where is it again? Yeah. Okay, so see here. So here is the leg. It was this leg that shoot this market up. So you can see that the market was ranging here, then it took off. That's why you can see some squeezes here. You can see that there is something like a step here. It came up here, it pushed down, then it came up. No, this is 4 hours. So if we go to speaker time frame, you can see that there will be a long candle here that went up out of this place. So that is a demand zone where the market came up, and as a result of that, when the market returned back down, when the market traded down here, it really got to that zone. You see, the market started going up. So you would have been waiting here to look for where you are going to be able to buy the market. Let's go back to daily. Okay. All right. I have 2 arrows here. Okay. So let's look at this one. This one came down and it went up from here. All right. So you can even see a red candle here. You can see a red candle and a green candle beside each other here that were not really performing. You can see a long candle here. Then when they get here, the candle struggled, then the candle went up. So I can easily move this box here. That is it. Sorry. Okay, that's not what I wanted to move though. I wanted to move this. So you can see that place. You can see this place. It is this place that create a momentum that broke this. This is where it built momentum to break this. So when it went up there, when it come back, it respects that place and could not go further than and went higher. That is the idea. Went higher. And of course, the market went up blue, and it came back to that zone again. Let me see. So now we can now say this place. Look at this place now. Look at this place. Yeah. You can see another activity here. It's very simple. You can see another collection of candles, small candles here before this green one came out and the market move up. So all of this place, that is another demand zone. So that's why when this market, drop here, went up here, and it came down, when it get to this place in the zone, what did happen? The market went up higher. So that is it. So all of these ones are just they are just a structure inside structure. All this one that happened here is none of our business. Our business is that this market went up, okay? It came down, it went up, it came down, and it went up here, right? Then it came down. So all the activity that happened here, they are just insider. You can call them inside structure. They're not part of the main structure, right? So it came down here, touched the levels, and went higher. Okay, so that is how you identify levels, so where you want to enter. So when you already see like situations like this, and the market went up, you would have drawn a box like this, so that when this market came back and is dancing around there, you can easily be expectant to see it shoot out. Immediately it shoot out, you know that it has rejected. You can just, in fact, most traders, once it's in the middle here, that's where they would have placed the buy, right? And they will put their stop loss along this below, so that if it comes down, they take their losses. But if the market obey their strategy, then they take their profit. So that's how it works. So when it also went up, it came back again, and at this time around, is obeying, is following the activity here. Sorry, the activity. Let me remove this. Is following the activity here. You see all this place. The market range, and it shoots up from here. So when the market went up and it came down, then you respect that place, and the market, you can see the green candle here, it shoot up, you return back, then it shoot up higher, and it keep returning like that till it take you far up to create a higher high. So that is how it works. So now you can see here we have a double top, because if you look at this red candle here, you see that is an engulfing candle against this green candle. It engulf it down. So it is a communication of a strong momentum to sell. And you can also see that this leg is not higher than this leg. So this leg did not create a higher high. So it created a higher high here. It dropped down, then they create a double top now. So what we have is double top. So if we are to go by this rule, and this leg started here, so if you create a double top, then it's coming down here, it went up, it pulled back, this might come down to somewhere around here, and once it come around there, it's going to break this. Once it break this, then that means the market is falling into sell. It is as simple as that. So you can continue on like that. If you check other chart, you will continue to see similarities. No, it's not always the same. The charts are never the same, but you will always see some things that tell you that, you know what, these things are all kind of related. Let me see this chart, and let me see if it's gonna give us something, uh something we can look up to. Let's see, volatility 10. Okay, so this is not, is the structure is not clear, though this is a sell market, because let me show you. Like I said, most market is not always straightforward. You can see this market is coming from here, it came down here, sorry, let me read this. It came down here, it went up here, which means it didn't come up to this place anymore. So by the time it's going, okay, it went down, it came up here, so it's still ranging. But now in the current movement, you can see that it's already below this place, right? It's going down. So it has respected this point where it started from. It's respecting it. So it came here, it ranged here, it ranged, then now it's going down. It has broken this place. It has broken the last lower low, and it's going down. So somehow in weekly, you can see that that market is a sell. If you go to small time frame, you can also see more structure and more interpretation for that. Okay, let me look for another market. That's volatility 10. Let's see, volatility 25. Weekly, okay, you can see that the market is really very crazy. Yeah, if we come to, yes, this is a sell market, and you can see what I've done there. You can see I've already identified this market as a sell market. You see, it's coming from up here, it came here, it pushed back, and pushing back here, I put a box here. You can see that the market went down very far and came back and touched the box. You see, immediately it touched the box because there's an order block here. So immediately it touched that box, what happened? The market started selling, right? So that is it. You can see on daily. If I go to smaller time frame, let me see if I can go to smaller time frame now. Let me go to 4 hours. Okay, 4 hours. Yes, hour, 1 hour. So you can see in 1 hour, I already placed a box here. I've already placed a box here because the market has, it came down, it pushed back, then it went down, breaking this place. So I've already put a box here, which means that I'm waiting to see it trade back to this area. So now trading back to this area could be in two ways. You could trade back, all right, to target this. Actually, you can actually trade back targeting this. Excuse me. Yeah, let me leave it this way. You can actually trade back targeting this. You can just touch the head and go, and you can trade back to target this. Now, why did I choose this place? Because when it's coming up to break this lower low, there was a pushback here. It met a resistance. So it was this place it developed momentum to break this. Let me go to like 30 minutes. Okay, let me even go to 15 minutes. All right, so, oh shit. Okay, so this market, no, 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 no. See this, oh shit, why is it doing that? Okay, so this market came up. market came up here, then it pushed back. Then it pushed back, then it now climb up from there. So climb up from there. So that's why I identify that zone, that no matter what happened, that is the area where the market is going to finally push down. So now, so I'm waiting for it to now to return back to create a balance. Okay, so once this market creates a balance, then we can look for an opportunity to sell. So you can see I started from 4 hours or even daily. Sorry, daily. Yeah, you can see daily here. So we are waiting for that opportunity for us to be able to now sell somewhere, because we missed this one. So we are now waiting for, in a small time frame, opportunity for us to be able to sell here. Yeah, so that is it. And if that opportunity is missed, we can also still look at it from another angle. If I look at this very well, okay, I think it has actually explored that. Sorry, if you look at these three candle, I told us about three candle: this red candle, and this green candle. If you look in between them, you will see a gap. You are going to see a gap. You are going to see a gap here, right? And it is that gap that this red candle traded into first. You see, it traded into that gap before it went down. So immediately these three candle dropped. If you are monitoring the market, you would have dropped this box, for example, as a trader. So immediately this candle opened and it traded inside this to create a balance. This is a time to drop a sell. You drop a sell. Now, this market now that is currently trading now can still do something before the market. If you look at this list, let me draw another. Let me move this box here, since that place has been used. So now you can see between this candle, and this candle, there is an imbalance. There is still an imbalance. So this market now, before night, before this candle will close by 1 a.m. tonight, it can still go back here to meet the mouth of this green candle, then return down. Or this candle will continue like this and close here. Then the next candle, when it's open, will trade down to still come and fill this, because there's a gap here between this candle, and this candle. There is a gap. It's called fair value gap. So now this market must trade back into this gap. Now it must trade back into this gap, fill it, then return to sell. So this is a gap to watch out for, that this market, because the gap that is here, you can see that this one has traded into it. That's how some people trade daily candles. If you strategy for trading daily candle, let me give an example now. You see where this candle open on buy. Let me give you an example where this candle open on buy. Okay, it closed here, another candle open here, it came down a little and went up and closed. Another candle open, it traded down to kiss this one and close. Really close. Another one open here and went up. Okay, so that's how this candle went up. Now all the gap that is left here, you can see now that this candle is trading back. It's trading back to come and cover all, because there is a gap here. Look at it. There's a gap here. There's a gap there when the market was going on buy. You see the gap here. So this market now will still trade down to come in there and fill it. So this is how market moves. It must create a balance. Anywhere there's a gap, you see between this candle, and this candle, there was a gap here. Now it has traded back to fill that gap back. So it will trade back and fill it. Now it has left a gap here now. it will go up, then it will go back to fill this gap, then return to sell, because it still have more gap here to fill. So this is how market moves and create imbalances, and they go back, to fill those imbalances and return to their original direction. If you understand the market from this angle, it's easy for you. You just have to master. It's about mastering it. Okay. All right. So I don't want this video to be too long though. I want to believe you grab what I'm trying to say. If you have questions, kindly message me.